Hey traders, welcome to Profiling to Profit, the week ahead in futures. It is October 22nd, 2016. I almost said 19,016. That's a long time ago. But it is Saturday. I hope everybody had a great week last week in the markets. A lot of nothing going on last week in the indexes. It was just a low volume, low volatility, inside week, and we'll talk about that in a second. We have if you've not heard me say this, you're obviously not listening to these, but we do have an election coming up here November 8th in the United States. It's getting ugly, a lot of mudslinging, a lot of rock throwing. Not sure how it's all going to shake out in the end, but it's definitely making for an interesting election, one to be written in the history books, of course. And then the markets. The markets again were flat last week, and what's coming up this week? Well, not a lot again. Let's take a look at the news. We only have three Feds talking this week. We have Dudley, Bullard, and Lockhart. Those happens on Monday and Tuesday. We really don't have any earth-shattering news. We do have GDP number out on Friday. I just don't expect that to make the markets go crazy. It's not like an unemployment number or anything. Unless something happens in here, we have a snake in the woodpile, which there could be, and we'll talk about that in a few minutes. Nothing coming out of the U.S. to really worry about. However, overseas, it is fairly light overseas as well. The one that we probably need to keep an eye on is on Tuesday. We do have the Bank of England's Governor Carney is speaking, and of course the ECB President Mario Draghi is also speaking. They could have some impact into the marketplace. And then on Wednesday, we do have some news out of Australia, which means that if you're an Aussie dollar trader, just keep an eye on that. Other than that, pretty light all week, guys. Let's dig into the charts real quick. As we mentioned, the indexes just didn't do a lot of anything. After one very large sell-off week, and this is large for what we've seen, of course, it's all relative, but we did have sort of a sideways, sideways to up or sideways to balance, however you look at it. The NASDAQ was the strongest. We are in the earnings season right now, so we got to keep an eye on that. That can have an impact on the indexes. We saw Netflix come out this week, and it blew out earnings. And it had an impact, and the NASDAQ followed behind it. However, it did get sold a little bit, tried to rally late in the week. We'll see what this next week brings. I don't have any levels for the NASDAQ. I just don't see anything. It is a bit bullish here, just a bit. But we're still expecting this to come down and test this trend line and then possibly break it out. That would make more sense rather than rolling back up and making new highs up here. And here's why we believe that. Let's go ahead and take a look here at the ES. The ES, while the NASDAQ did try to rally a little bit, the ES was fairly balanced and is still below our risk zone here. It has not hit it from 2145 up into that 2160 area. We fully expect that to be held down. This is a pretty nice balance area here, and after breaking out of it, we expect this to continue to the low side, looking for that 2100 down into that 2093 area. So path of least resistance for the ES is to the downside. Continue to watch that risk area there, guys. And then, of course, the Russell, who is the weakest of them all right now. Let's take a look at that. Russell did go into our risk zone that we define. It could have gotten you short. We are not short the Russell. It just didn't give us a trigger on it. It did go down, and boy, one or two ticks? That's 3 ticks below the previous week's low. Just caught a few stops there and ran them. So pretty typical normal market stuff there. Probably cleaned them out so they can go down and flush this thing out. I definitely would love them to run this down, test this 1190 area, and then of course 1170 area. I believe we have some gaps down there. We do have gaps down there. That's one reason we're looking at that. We have a gap down in that 1190 area. Now the gap lower than that is a little higher, 1171, but there's this area right here at 1160, so 69. So just say 1170, 1172 is the area on the second target there if you are short. And if you are short, congratulations. I think this is going to be a great trade for you. But watch that. It is the weakest of the indexes. That's why we feel the indexes are maybe starting to roll over a little bit. Let's take a look at crude. everybody's mind's on crude. Now, I've had this trouble with crude recently, loading the profiles. I don't know if that's because we rolled last week and this is a continuous contract, but let's move on to gold. I'll come back to crude here in a minute. All right, gold. This is, to me, this is a bit frustrating when people are gold bugs and they just keep telling you how great gold's going to be. It's going to be, you know, the next currency, and oh my goodness, it's going to go higher, and everybody's calling for more long in gold, and it's almost silly on this deal right now. And here's the other thing: they talk about the long term, and nobody defines long term. If you're going to talk long term, you need to define it. Is it long term 1 week, 2 weeks, 1 year, 2 years? What is it? We need to know, because that definitely has an impact on the type of trade you're taking. And in this case, the path of least resistance until we get back above 1105, or excuse me, 1305, is to the downside. Our risk zone is up here at 1290, up into the 11, or why do I keep saying 11? But 1302, and then above, of course, is 1304. That's where if price gets back above there, then you know, all bets are off. They could roll back into the zone and chop around for a while. But at this time, we think we're going to go down, test this trend line, break it out. I like the fact that we could go down in that 1243 area and keep rolling down. We're still short in here. If you are not short, you need to wait for the risk zone in here. This risk zone should hold on the first touch, and if there's real selling into this thing, they'll take it down and blow it out. However, just understand how gold works. Gold is like the euro, which we'll talk about the euro in a minute. Gold is like the euro. It typically doesn't pull back much. If it's weak, it's going to balance and then continue to move from there. This is not what I would call a pullback right in here. This is fairly normal action on gold. At this point, to the downside is the path of least resistance. All right, speaking of the euro, let's go take a look. Now, I had this drawn differently, and I finished the video, and I realized I left something out, so I'm redoing the video. But we had our risk zone, which was just above around that 110.72 area, and it rolled up into that 110.70 or 80 area, and you can see price came within a few ticks of our risk zone. And I said in the last video, and this is exactly what I'm going to say again, is that this is a lesson. If you're a new trader, you need to listen to this and then go back and replay it 3 times and listen again. If you define an area for your trade and price does not make it to your trade, and even if it comes close to your area, it's not a trade. And you have to be disciplined on that, because here's what happens. Chasing trades, or what we call fear of missing out, FOMO, learn that acronym. FOMO is a killer of accounts and a killer of trade careers. It's like a dog who chases cars. They don't last very long, okay? So if you didn't get this trade, or if you chased it, shame on you, first of all. Second of all, you got lucky. If you didn't get the trade along with us, we're not in this short. That's the way trading works. There will be plenty of more opportunities in this market. Let's take a look. Let's go back and look at the daily on this. I mean, listen, there's ample opportunity. We go back into, let's see here, there's 16, 15. So we go back into 2015, there was awesome opportunity. 2014, there was awesome opportunity. Even in some of these opportunities early in 2016, there was some opportunity in here. Other than that, it's been going sideways for quite some time. We have now opportunity, we believe. So we think, where is this going to? We think we're going to go down and test this lower trend line again. We believe that's the target on the deal. Now, can we get involved since we just missed an entry? Yes, we can. We pulled down the risk area. If I can get my charts to pay it work for me. We pulled down this risk area in here, and now we're at 110.23 up into that 110.53 area, or 50, should we say. And this is a small area, guys, and the triggers are going to have to be pretty quick into this thing. There's a lot of supply in this candle. We think that they will push this back over if they get up there. But if not, guys, they could just quickly run down and touch this lower level down here. If that's the case, this zone is gone, and you're just going to have to say, hey, we missed it. and we'll catch another one, and that's just the way it works. But nonetheless, it is moving. It's good to see the euro moving. We like the euro. We love trading the euro. It has been a long dry spell for the euro, so hopefully we can get in this trade. If not, we'll wait for another opportunity. We think there's going to be more coming forward, especially in 2017, so be patient. All right, let's go take a look at the notes. All right, notes bounced just a little bit. You know, we were hoping they would sell off into our zone. We were able to get long. They did not. It's sort of an outside balance week. The POC is holding this down. The path of least resistance is still to the downside. However, they're not making big new lows here, and that's a little bit concerning. We still would like to see them break down one more last time to get into our zone before we could get long for a little longer trade. However, the bonds is giving us a small setup here. Not my favorite setup, but it is one you can take advantage of it. The thing with the setup like this, it's hard to define risk. And in trading, guys, it's all about defining risk and managing that risk. And that's why we use zones, because you can get in 100 different ways into the zone and manage the risk based on the way you get into it. All right, so here's the deal with the bonds. The bonds, when they typically have an inside week, which what we saw, it came down, tried to test the low of the previous week, rolled back up, got rejected at the just below the low of the high, not to confuse anybody, of the previous week. So we have a nice balanced inside week. On bonds, typically when we have a inside week, this breaks out the following week. Now, does it always act like that? Does it always happen that way? No. Here's how. Let's go back. How many weeks this is? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 to about, 9. We saw these little false breakouts. However, I mean, they'll give you some money. It isn't going to be a lot. And then we had some inside week here and a fake break and then another fake break. And then finally we started to sell off quite a bit. All right, so we could go sideways, but typically they like to break out, at least test it and stuff like that. So if this is your style of trade, here's an opportunity. The opportunity again is up here. We'll watch the 165.07 to the upside, and of course 163.07 to the downside. If it does break and you get involved in this, please define your risk, whether it's below a POC, below a candle, however you defined it, just define it and stick to your stops on that thing. Don't let this get out of control. Not our favorite, but we saw it. We thought we'd bring it to your attention. We are still waiting for this zone below. And we would like to see one more test of this zone so we can get long back to the POC and maybe even higher from there. So, all right, let's go back to crude. See if we can get crude to work for us again. There she is. Okay, crude is, you know, crude's in need of a little pullback here, or at least a little sideways action. Every move to the upside is getting hit. It's getting sold. Okay, so you see 2 weeks ago, rallied up, got sold off. Rallied up again this week, last week, got sold off. Okay, so that's telling us that there's some sellers. We're finding sellers up there. They want to push this thing and roll it over a little bit. We like our zone, our buy zone down here at 47.45 to that 48.22 area. We think that that is a great opportunity for this market to hold and roll back up. Again, long term, where is this going? Okay, let me define long term. I just ragged on somebody because they didn't define long term, so I'm going to define it. Long term could mean in this trade 4 weeks. It could mean 8 weeks. So if this thing breaks above that most recent high, that 52.35 area, there's an area up here, 54.75 that we're watching. 54, let's just say 54.80 it is actually when we pulled it in closer. That is a resistance zone. If it breaks above that zone, we do have a gap a little bit higher at about 56.72, 56.75 area. We could get into that and close that gap. That gap is way back from July of this or 2015, so that's quite some gap. But the structure, the way that they've been buying this thing up, this suggests that there is going to be more upside. We would like to see a little pullback so we could get involved in this. We're not going to chase it up here. This is how people get ran over. Right now, if you're chasing and shorting, it is sort of just a day trade or maybe a 1 or 2 day trade. I'm not going to post those here. I'm just going to post things that you can get a little bit bigger move on. But we like the zone down here for more upside, and our longer term targets, again, 4 weeks, 8 weeks, are going to be up at that 54 and then higher than that. So, all right. What else do we have on tap? Let's go look at corn real quick. Corn is holding above our risk zone. I like to say that the risk zone is holding corn up, but I know that's not true, and I shouldn't be saying that because it's not. It's definitely not true. However, the zone is it's there. Price is above it. It did touch it to the tick. It didn't get us in. However, if you trade the edges of the zones, that's an opportunity for you to get in, and you may be long in here. We do like the upside. It needs to now move through this POC of $3.60 to see more upside. I tell you, if we do get to the upside and we pop that $3.60, we can get a nice move into 370 and possibly 375 there. However, if it breaks down below $3.45 and you're triggered long, that is your line in the sand. Below that, we're going to jump out of the trade and say we're wrong on it. On the soybean side of things, it's sort of the same thing. We had this sideways action for a couple weeks, and then we had sort of an engulfing, not quite an engulfing, but an engulfing week. And then, of course, we've traded higher and balanced. We saw that earlier as well on another market. And now the POC is holding this up. 976. I say it's not holding up, it's just rotating around there. We have a good chance of taking out and the highs of this last week and going up in that $9.94. It's just not a trade for us. We're not going to trade this to the upside because there's not enough movement in there and not enough room in that area. Our zone that we're really waiting for is down here below the market, and I'm not sure if we're going to get that. We thought for sure we'd get this with the way this was setting up and the way that the supply was coming into the marketplace and what the USDA reports were giving, but nothing. We don't have it yet. So we'll keep the zone here. It's still a valid zone. We'll see if we get down there. But right now it's trying to follow corn to the upside. We'll see if it gets any legs. Most likely all the grains are waiting for the next USDA report, and of course the move into the end of harvest, which isn't going to be done until sometime in November, late November, and of course the really southern states will not be done until probably the first part of December. So anyway, guys, I think that's it for this week. Again, keep your eye on the news. If you guys haven't, and I say this all the time, and
bye there is going to be something that you're...
That's interesting. So if you have not been over to the Market Profile Trading Academy website, go ahead and get on over there. We have just lots of free resources for you. Go to the free resources tab, scroll down to the right side, and that's where all the information is. We have, again, lots of stuff on, we have videos, webinar recordings, trade management information. We have everything there. Also, we have a three-session quick launch workshop. We are 2 sessions into the first one, and the next one is November 2nd. You are able to hop on that with us. Go ahead and do that. And of course, we have some new session coming out in January after the first of the year. So keep your eyes peeled for that. Other than that, guys, have a great week. Oh, you know what? There's one thing I do want to go back and talk about. I'm sorry I missed this in the first video, is the dollar. All right, I said earlier that there is a snake in the woodshed, or there could be, or the wood pile, or however you look at that. Let's go ahead and pull this thing out. The dollar is that snake. Gotta go way out, sorry. The dollar is that snake. Okay, we have 154 as the highs back in late 2015. We had this nice break in the dollar. The dollar's ripping right now. It is absolutely going crazy. People say it's in fuego. Well, I don't think it's in fuego. I think it's got a shot at 154. This will keep pressure on gold. Now, could it use a pullback? Sure, it definitely could use a pullback. But if this thing continues to go and we break out 100, this thing could put a lot of pressure on gold. and a lot of other things as well. So we got to watch the dollar. Dollar power right now is the sort of the snake in the wood pile, and I suspect the dollar will have some reaction to the presidential election as well, and we will need to watch that, and I will try to be watching that every week for you guys, and I'll place it in here. But that is what we are talking about. Everything can change based on what the dollar does, and we see we've had this nice breakout from a very large balance area, this POC. We know that all moves form from the POC. Pretty normal market profile stuff. This thing has moved up nicely and has absolutely just torn people apart, and we expect it to continue on up to $100. I think that's the magnet right now. So with that, guys, I'll end it here. Guys, have a great week. And if you have any questions, again, go over to the Market Profile Trading Academy. Go ahead and hit the Contact Us button. Leave us a message or just give us a quick call. We'll be glad to talk with you, answer any questions you may have. Otherwise, good trading, guys. Take care. We'll talk to you next week.